All right. Good morning, guys. Welcome to a new forecast. Actually, I wanted to say pre-market analysis, but it's a forecast. It's Sunday, 8 a.m., the 5th of May. Um, and yeah, look what we have. Hold up 1 second. 10 o'clock. Yes, perfect. We're here and let's dive into it. So, what we can see last week, towards the end of the week, took out previous weekly highs, so that's nice. We took out internal range liquidity, and guess what? We tap into the premium areas. So what does that mean? That we can look for potential shorts. And knowing that, we can first clean up everything over here. I want to keep that area for now. Take that away. That can go. That can go. This can go. This can go. This can go. Everything can be cleaned up because we don't need it. And it's just noise and we don't need noise. Let me zoom in real quick, check if we got everything. Yeah, that's looking good. I can take off this. We can go to the weekly and dive into the charts to see where we are. So first of all, breaking it down, top down as usual. We know that we are inside the premium areas of this red range, overall the largest, most major range. We tap into this key area, key level. From there, we got a reaction, price pushed down, actually towards the third, slightly October, November, December, slightly the fourth quarter of 2023. And by doing so, we created also a high on the bullish side of a more minor range, the yellow one, as you can see over here. So we are above all highs on the yellow range. We are inside premium areas, or we tapped into premium areas on the red range. So what we want to see on the yellow range is discounted areas to continue long. What we want to see on the red range is lower lows to continue short. So discount means lower pricing and lower lows means lower pricing. So both the red range and the yellow range are realigned at the moment. Then zooming in further, we got our dark blue range that reached into the premium areas as well, and basically is in alignment with the red range, and also looking for lower lows as we had a high that led to a new low, return to discount pricing and potential lower low. However, it's taking its time to get there. So whether that's to build up liquidity or maybe it won't even go down, who knows? Time will tell us. But based on the structure, again, we want to see lower pricing. 1 sec. Hay fever or pollen allergy. Then our last range or last major range, so let's say high time frame range, is the light blue range. And as we can see, the light blue range, high, a low, a lower high, and sorry. Now a valid lower low, which can be marked out. Why can it be marked out? Because we tapped into the premium area. So whatever happens now, this is our low that we count as a low. Sorry for my nose. We can see prices building up liquidity quite nicely. Actually tapped perfectly into that trend line and gave a reaction. So based on that, I can already start to form a little bias, is that we want to see price trickle a little bit further down. Hold up, this one can be marked out as well. We want to see price trickle a little bit further down to, I don't know, maybe what does the daily look like? Maybe the people that trade these trend lines want to see a bearish candle before they enter. I'm just making up something that's in my mind right now. They want to see another bearish candle before they enter, swing traders. So what they do, they wait, and Monday might give us a bearish candle. And then what we want to see is that price trickles further down a little bit more to induce these sellers. So, and once these sellers are induced, we will go back up, come further up, either react from this block or take out this liquidity and then give us the move to continue further down. That way we induce sellers here. They will place their stops above these trend lines. So what we do have to keep in mind is that this trend line is all the way up to, or starts all the way over here. So a potential scenario could also be that we get a higher time frame inducement and then continue further down. But yeah. First, I want to see price trickle further down. Then we can look for longs from this area, long into these areas, or even up here and up here. And from there, we can look to short into the range. We've got to keep in mind that shorts are already very valid, that because we tapped into that premium areas. If we go to the daily, we can see that we tapped into that daily fair value gap or imbalance that sits over here. So we tap into that. So that's quite valid as well. So high time frame wise, we can do two things. First of all, let me mark out the areas so we know where to look for them. So we've got previous weekly highs up there. We've got previous weekly lows down there, if I'm correct. I think I am, pretty sure I am. There we go. Then daily, of course, daily highs up here as well. Previous daily high, bottom. And then the previous daily low sits there. And as we can see when we zoom in, is that there's no structure yet. There's no structure formed here. So for us to look for shorts, we need to come up here anyway, until there's some form of structure on the lower time frames, ideally on the 15 or 15-minute supply zone. But at the moment, there's nothing we can work with, really nothing. And for longs, we do have the news event, FOMC, so, sorry, NFP. So we want to see price get below the news event anyway. And what sits below that? Well, the start of Friday, actually the end of Thursday. We have previous daily lows, nice liquidity point for us to look for potential longs from this 15-minute demand zone. I think it's looking, yeah, it's better than the 15. We have that 15-minute demand zone. We're inside that also a nice fair value gap on the 1 hour or imbalance, whatever you want to call it. So for me, for next week, what I'm looking at is longs from here and shorts from up these areas. And then overall, I'm still looking at this move where we get this to play out. And that's it for EU. I think we covered everything. We know that we have the trend line up there. I kind of don't like it that it's this stretch, but it looks good, or it doesn't look good, but it points out exactly what we want. And yeah. Yeah. I think that's it for GU. Let me go over we covered structures, we covered liquidity to the upside. Oh, forgot to say we're building up nice liquidity to the downside here as well. As you can see, these lows, very correctional move. to the upside. So I'm quite confident that we will get that move further down. Bias based on liquidity, also covered that. We covered the high time from so this wick on a daily is also pointing out a clear rejection. Building up either nice liquidity or already indicating that we might move from here. What's going to happen, I don't know. If we don't get a move here or we get a loss here, then price probably pushes further down, but we don't know for sure until it happens. And what I said with the fake range is that because this liquidity, there might be a slight possibility the price pushes up here, then we get a move from there and then pushes further down. But that's very unlikely, well, not unlikely, but it will take some time for that to happen. So ideally, we follow these ranges, especially with EU, DXY, clear rejection as well, coming into these areas. Also tapping into that discounted area, if I'm correct. No, I just missed it. Still missed it. But got the equals up here. We've got that support level. But not as clean as the downside as on EU. Actually should be at the 4 hour. Not as clean as EU. But neither is that trend line right there. Is it? Nah, so on DXY we already broke below that. Broke through that trend line and then got that rejection. We did close back above that, or no, we just missed that as well. So yeah. But looking at maybe, like I said, on EU, we could come up a little bit higher. I feel like we could get a little bit lower. Not really to take out this low or this low. Sorry. Although it would be great if we take out that low, but especially because to reach into that discounted area of this bullish range, then continue further up bullish because we know that overall we want to reach back into these highest areas before we look for an overall rollover to the lows and death to the dollar. So yeah, then GU breaking it down as well. We know that we reached into these higher premium areas, also quite key level there. Not really that this is like more the key level up here, but into a support and resistance zone nonetheless. And pretty much same story there, right? So we have the high that that's new low, most major range, internal range liquidity taken, tapped into that nice supply zone, gave us a push down, and we're looking at lower lows on that range. Then just like EU, we have our bullish yellow range where we look for this kind of pricing. So we look for price to move further down. Now, the only thing is with GU is that we have a bullish dark blue range and we reach already into the discounted areas. So we're actually looking at higher highs on that one, which does not align with EU or DXY. However, this move to the upside is taking its time. It's really taking a long time to get up there. So we might, we could say, well, we can't say that, but the possibility may exist that we not get up there yet and price moves further down first, breaks bearish, on this low, then break bearish there, and then we have a lower low. Then we look for lower highs on this range, of course, as well, because then we have a lower low, then we look for lower high, potential lower low, and then we will see whether DXY will do its thing, and we move further, move to the upside, or GU and EU will keep its strength and move further to the downside, which actually means dollar strength. But I think that once we reach into these areas on the XY, price will massively turn around, flip around, and break down, and we will get dollar weakness. Then zooming in, so we've got this bullish structure, want to see higher highs, but we have this bearish dark green structure where we want to see higher lows, and there's a lot going on actually, but let's clean it up first. So we took these highs. It's a bit messy there. Broke up there, broke down there, and this is the range we're working with. Internal range liquidity taken, and a bit like EU, but not as clean. We have a trend line, but it actually starts here. That's a bit like this. Actually, you could take the second one and do it like that. It's more of a trend line channel. But we can see that we reached into these premium areas as well, meaning that we want to see lower pricing. And I actually ignored this entire range and started to look at this one. So we broke below here. Then we have a low that lets you new high, higher low, higher high, and a potential higher low from this 15-minute demand zone, where we have previous weekly highs. Whoops. Previous weekly highs up here. We have previous daily highs up there as well. Then we've got previous, let me make sure I'm correct. I think I'm not. Previous daily lows down there. Pardon. Why is it not working? Okay. And if we zoom in further, you could actually see that just like EU, building up liquidity quite nicely there. So just like EU again, we want to see price trickle a little bit further down, gives us potential long entry, take out the highs, and from there we can see that overall rollover. And that's pretty much the same as on EU. So yeah, not much to cover. Daily candle also looks quite the same. Actually, even worse as on EU because we dropped back below that liquidity. We dropped right below that liquidity, so we might actually get the turnaround right away. But I feel like we first need to move up higher before we can move lower. Little sweep there. This one is super clean. Low, high, higher, low, higher, high, bearish break, bullish break, internal range liquidity taken, building up more liquidity, sweep to the upside. Now we can look for longs from these areas. We know that we have this range overall. Whether we'll get back there, I don't know. That is quite some time to get all the way back here, then all the way up there, and then get the move. That's quite some distance. So I feel like price doesn't have that time. Price is in a hurry at the moment. It wants to get up here so we can move further down. So I'm looking for that liquidity to be taken and then longs into here. And from above the previous weekly highs, I look for shorts or I look for a structure realignment and then I look for shorts. With that being said, I want to mark out that structure there. So we're going for, let's not make it too messy. Let's make this one a 50-minute. Okay, 1 hour, my bad. And give a nice color. Sure. Like that. this one for reference so I know why I chose that structure there. So yeah, that's pretty much my forecast for this week. Looking for longs into shorts starting the week, but overall looking for shorts now. And same for EU, looking for longs into shorts, but overall we're looking for shorts because we reached that premium area. And with the XY, did miss the premium or discounted areas, but this area above, we could already get a move to the upside. This one sweat there, not really sweet because this didn't lead to a new high. But yeah, I don't know how ready if DXY is ready already to move further upwards, but that rejection is kind of interesting. So yeah, let's see, let's see, let's see. Anyway, guys, I wish you guys good luck this week. If you have any questions, let me know. Shoot me DM, comment, whatever. And yeah, peace out. Catch you guys later.